Good morning. Welcome to our new session on access to capital and how your personal credit impacts your ability to access debt capital. My name is Cynthia Nevels. I'm your facilitator and the founder of Start.Pivot.Grow, the accelerator designed for small businesses to access capital through education and business advising. Let's talk about digital capital and commercial lending and how it works. How do you apply for a commercial business loan through a traditional bank or micro lender such as a CDFI? Let's look at and evaluate whether or not you're ready. Let's look at your personal debt, your current business debt. How are you using credit before applying for a commercial loan? What's your current personal credit score, as well as your business credit score? Do you have UCC filings? And if so, what are they? And what has been your sales history? What is your income? What's your traction? And accessing and measuring your cash flow and whether or not your business is profitable, which simply means can you service a loan at this time in your business? These are many questions that you want to pre-evaluate before you start the process of accessing capital, in particular debt capital. Let me walk you through it. So, the application process, you're going to be providing very detailed information about your personal data and your personal financial status, as well as business data and your business credit and how you've handled your finances over the last 2 to 3 years. If you are a startup and newly formed business without any income or revenue, that's going to be a different process and an evaluation process. So keep that in mind. But if you have been in business for longer than 2 years, you're going to provide all of the financial details, your personal as well as your business. So in the pre-evaluation process, your loan officer is going to collect all of your financial documents and required documents and prep them before submitting your application to the underwriting department. And they're going to conduct a financial analysis, a very in depth analysis, whereas they're looking at ratios and data very carefully to determine whether or not you are a viable option for a loan. What they're looking for are the data points that tells them that you are ready to access capital. And that is proven by the financial data that you provide to the lending officer. The underwriter, if you get past that point, is going to collect all of that data as well as the case statement from the loan officer. And then they're going to work to mitigate risk. They're evaluating all of the data, applying their numbers and their analysis strategy to determine whether or not you are a viable risk. And you want to present the best case scenario. And so your personal credit, how you've handled money personally in the past, as well as your business credit and how you've managed the cash that flows through the business, and whether or not you have been profitable consistently is important. Profitability shows that you have capacity to service a loan. And that can be very difficult if you've been filing tax returns that demonstrate and show a loss for the last 2 to 3 years, whether you're trying to mitigate risk and liability in paying taxes, or you simply have not ran a profitable operation. These are things that you want to consider and think about before venturing into the process of applying for a loan to minimize the risk of being declined. So you're going to analyze your personal financials. You're going to analyze where you are personally and whether or not you're ready to access capital, additional liabilities for the business. And there's a checklist that you want to follow. We provide this data and information inside of our training programs to help you analyze your financials and to better understand what position are you in your home in order for you to be prepared to qualify for a business line of credit or a term loan with your financial institution. There are different products that are available on the financial market, and you want to be familiar with what they are and predetermine what's the best debt option for you. A line of credit may be viable, a credit card may be ideal, or an SBA guaranteed loan may be better. You have to look at the landscape to determine what's the right choice for you and your business. As you walk through this program and or access the loan preparation program that's available online, you'll quickly find out what are all of the steps that you need to go through, prepare for, and package before you begin the application process with the lender of your choice. Choosing the right lender is extremely important. You want to have a relationship with that financial institution that is going to be long term and beneficial to you and your business. It's not solely just about the capital. And so, through these programs that we've designed, we're really focused on helping you prepare your business to move forward to ensure that when you need capital, before you need capital, you are prepared, you know how it works and what they're looking for. And when you're evaluating your financials, part of your strategy should be looking at how much personal debt do you have today? How much business debt do you have? How much needs to be reduced? And what your plans are to reduce that liability to improve your chances of getting more capital in the future. And that may require a great deal of sacrifice. It may require you focusing on your personal credit score to get it above 670, which typically is going to be the minimum that's required just to get you into the door. So the higher your personal credit score, the less debt that you are carrying or that you have is better for you and for your business. So yes, if you're asking the question if your personal credit score has an impact on your ability to access capital, the answer is yes. But there are strategies that you can put in place 1 to 2 years prior to ensure by year 3, you're ready to access the larger amounts of capital to fuel growth in your business. I hope this helps and I look forward to working with you build your business.